You're listening to the Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey Moose, so today we have a special episode because I recorded this first on Wednesday morning and then more news came in. So I wanted to let you know my first impression about the tariffs. So I'm going to let run the original episode, and then we're going to have an outro. We're going to have like a prologue or like more. So yeah, this time the Moose on the Loose will be more than 10 minutes. Let's do this. Hey, what's up, Market Moose? Mike for the Moose on the Loose. How are you doing on this Thursday? I wanted to wait about a week before recording something about Liberation Day, tariff mode, panic attack, and probably like dead cat bounce and more zombies. All of this in 10 minutes for today. All right, so last week we had Liberation Day. Like that was a kind of like strange brand name for an announcement that all countries will have to suffer tariffs from the United States. The market didn't like that. Big surprise. The reason why the market is down so fast is nobody expected so large tariffs like this. I mean, it's just wherever you live, you will have tariff, even if you do not have even a trade deficit. Because I mean, at first it was just, we're going to calculate the trade deficit between two countries. And whenever there is one, we're going to impose a tariff to bring that back even. But if we don't have a trade tariff with you guys, we're still going to impose a tariff because that's whatever, like how did Trump administration feel? So anyways, the reason why I take this tone to explain what's happening is to show you how the market is confused, is to show you how there is no straight line. It's like every day comes with a lot of surprises. And one thing that investors hate, it's uncertainties. I've been saying that for a while, but there you go. So you got this big problem coming up. A couple of weeks ago, I did a webinar, and then we were talking about tariffs, of course, with my members. And then one member, Don, and I hope that you're listening to this, Don, because I want to thank you. I want to say that you were right, because he wrote, well, I'm going to wait until April 2nd before investing. And then I kind of like teased him because we are having fun at DSR. We're just like friends, and we're just like, yeah, well, why not wait until like April 2nd at 2:32 or maybe April 14th or any other date? Because the point was like, we don't know what's going to happen on April 2nd. And you might as well just stay invested. But if you had dry powder, that was definitely the right move to do, to wait until you see what happened on April 2nd. So kudos to you if you had dry powder. Now you're sitting on cash and you feel a lot better. But besides feeling better, like what's going to come next, right? Because right now, if you look at the S&P 500 or the TSX, we're back to roughly August 2024 level. So 8-9 months of growth disappeared in a span of about a week. All right, so if you have been sitting in dry powder for more than 8 months, you're not getting any deals. If you started to accumulate cash last fall, you're getting maybe like a 3% or a 5% deal. So was it really worth it? I don't know. Like it feels really, really good when you see the market going down by 10%. But at the same time, when I look at my portfolio, well, it went up big time. Now it's going back lower, of course. I'm down about like roughly, I don't know, like maybe 10% or something. I don't calculate that daily because there's no point. But I know I'm down. I'm down probably 10%, and that's fine. Because like last year, I went up by a lot more than 10%. So it's not the end of the world first. And then the second question will come. All right, so are we going to get more deals starting from now? I'm recording this on Wednesday morning as the market opens. It's negative, roughly down 1%. Crude oil is getting a beating for the past few days. It's going down and down and down. Now we're trading around like $56 a barrel. Kind of crazy, right? Like not too long, we're like at 75, almost like 80, like a year ago. And now we're like getting close to $55 a barrel. It's just crazy. That's probably a good place to start if you're looking for opportunities, I guess, because there is definitely an overreaction there. But it's really hard to say what's going to come up after next. I mean, kind of crazy, but this Tuesday, I mean, 2 days ago, not 25 years, right? 2 days ago, the market opened on fire. It was up like 3-4%, and then in the middle of the day, went back into red territory, like going down in negative 2-3%. So a 6-7% movement in a single day. This means that if you had $1 million invested in pure equity, you saw a swing of like $60,000-$70,000 in a single day. If it's more than 100 grand if you have like above $1.5 million invested. So what about a calm retirement, right? That is some crazy volatility, and it hurts. It hurts and makes you wonder what's gonna come out next. And a lot of people will say, well, that's a dead cat bounce, and dead cat bounce is a pretty grim expression, where if you throw a dead cat on the floor, it's going to bounce, but then it's going to stay dead, right? So it's to illustrate that when the market goes down very quickly, sometimes with a glimpse of hope, you're going to see the market going back up slightly, and then that's like the bounce, but really the market is dead, and then it's going to go down even further. It's also called a bullish trap. So someone that is really bullish, see the market going down 10%, starts investing, feels good about it because the market goes up like a couple of percent, and then boom, it goes down by another 5, 15, 20%, whatever, right? And then you're just like, yeah, I didn't buy the dip. The dip kept on dipping. So the thing is, even the dead cat bounce analogy is not really right. I mean, we should say that as any good horror stories, the dead cat will come back as a super strong zombie, because really the market never shut down yet. I mean, it's been ages that, yes, we see small rebounds and then another loss, and then eventually it's going to rebound anyway. So that's the way the market goes. It goes with cycles. Sometimes they're more heavier than others, and now it's kind of funny because these days I read articles like saying, oh yeah, this kind of volatility and market drop down only happened like 2 or 3 times in the history, and then they name the date, and then just to put the emphasis that right now is really different. Right now is like crazy shit. But if you look at any of those dates, I can't even remember those. Like one of them was obviously COVID. Well, do you remember like that 2020 ended up in positive territories? Like if you stayed invested the entire year and you did not look at your portfolio, you would say, oh, that was a good year. Like from January to January, like 2020 to 2021, it was a good year on the market. Whatever happens in between, yeah, definitely a lot of panic, but long story short, someone that did not touch his portfolio was richer at the end of 2020, despite having like the worst drop in history over like the past, like, I don't know, like 2 days, 5 days period, or like 2 week streak. Doesn't really matter, because eventually the company will adapt and then will thrive again. And now I want to just end up with going back to the reason why the market was up for a few hours on that day, on Tuesday. It's because there was a glimpse of hope that there were trade negotiation on the table. And then the market was like, oh, all right. So, because trade negotiation right now is at the center of this tariff war. If we have new deals between countries, the tariff will stop. We're going to like readapt with the new deals, and then we're going to continue doing business. And that's the whole point of this. I'm not saying that it's going to be perfect and all companies are going to make more money. I'm not saying that at all. I'm saying that if we have trade deals on the table that are being signed, the market will be, oh, all right, that is still maybe bad news. But now I have solid information. I have less uncertainty. And that's the whole point. The market went down later on that day because finally there was absolutely nothing on the table ready to be signed. So again, putting more uncertainty on the table. So as long as you will see uncertainty, there will be this chaos where you will see like stock price falling like there's no tomorrow. I'm not a big fan of the energy sector, but I must say that whenever the oil barrel drops like a rock like this, usually there is an opportunity over there. So I'm definitely going to take a look. It's just classic playbook. Investor 101, look at whatever sectors is being hit the most right now, and maybe you're going to find some interesting plays. Next week, I will host a private webinar for DSR members only. So if you're not a member at Dividend Stocks Rocks, you will not be aware of that webinar. You will not be able to ask your question. But if you are, I think we're going to be on for a pretty solid one. So now it's definitely the time to subscribe to Dividend Stocks Rock if you are interested in getting more information and helping you growing that conviction to invest in the market. So next week, I'm going to answer all your questions for a good 2.5 hours. And we're going to start with something very cool. We're going to start about how to read earnings per share numbers and put them into context and understand them in the matter of like the dividend triangle. And we're probably going to spend like another 2 hours talking about the market, the tariffs, and answering all your questions. So that's going to be very fun. You're going to receive the invite shortly, so stay tuned in your inbox. And for those who are not investors at Dividend Stocks Rock, well, please consider it, or at least grow some conviction and stay true to your strategy. That's the only thing that you can do right now, nothing else. So following this episode that was recorded around like 9 a.m., later on the day, Trump announced a 90-day pause on a lot of those tariffs that are known as reciprocal, which is not exactly true. But anyways, pause of tariffs of 90 days, but not on China. China, actually, the tariff increased at 125, mostly because China retaliated with their own tariffs, and most countries instead reached out to the president to negotiate. So long story short, the market was down like 1-2% this morning, and then at the time of recording the second phase of the moose on the loose, which is 3:45 p.m., so towards the end of the market, the Nasdaq is up 11%, the S&P 500 is up 9%, the Dow Jones up 7%. Crude oil that was heading towards $55 now is trading close to 62. The gold is now back over 3,000. Anyways, it's all rainbows and unicorns right now on the stock market. It was the end of the world a few hours before, and by the time you listen to this tomorrow morning, I don't know what's gonna happen next, right? Even one of my friends was said, "Hey Mike, how come did you not talk about the big moves on the market so far? And then why are you waiting to discuss that on the moves on the loose?" And I'm like, well, it's not really relevant, and Trump just proved my point. So if you made any move last week, this week, right now, before right now, I don't know, man. I'm staying true to my strategy. I'm not touching my portfolio. Right now, there is way too many things happening at the same time and way too much confusion. To be honest, I'm not even sure why people still listen to what the president has to say, because definitely this guy is just changing the rules every 2 minutes. So why don't you just look at the companies you have, make sure that you have like a quality portfolio, that you have high level of conviction, then shut down your broker's account and reopen it in like, I don't know, half a year, next year, something like that. It's probably not even worth it to look at it anymore. So anyways, just wanted to add a little bit more thoughts on this incredibly crazy market where, you know, we would be better off not even looking at the stock market these days, just focusing on enjoying life instead. So, all right, Moose, that is really enough for today. Enjoy outside, go outside. I mean, it's spring. I know it snowed yesterday in Quebec, so I hope that you're living in a better place than mine, because seriously, running in the snow beginning of April, that's not cool. That's not going to make it. So anyways, enjoy your day. We're going to talk again tomorrow. And until then, come on, you have to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right?
You're here for fun, you're here for information, and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy this show and do your due diligence after it.